Time for business now then. Will's with us here on set. And Eurozone finance ministers meeting this evening, in fact, in Brussels. Expected to sign off the second Greek bailout. Does that mean then the Greek crisis is over? I know the answer's going to be no, I just suspect.
Oh, I'm sorry. Yeah, you're absolutely right, Stuart. It is paused, shall we say, for now.
Yeah.
Private investors, of course, let Greece off 75% of what they owed them on Friday, effectively a default for Greece. But the problem is debt levels remain huge in the country. The best case scenario, what everyone's hoping will happen, is that by 2020, the Greek debt will be 120% of its GDP. Now, that is a massive number by any scale, and the thing is, that's the optimistic scenario. Not many economists think that even that will actually play out and actually happen. The real problem is that there's a lack of growth. We got new figures on Friday which confirmed that growth in Greece fell by 7%. Basically, the economy contracted by that amount in 2011, and it's for that reason that it will be very difficult for the country to grow its way out of this crisis, especially with more cuts on the way. So already economists and indeed politicians are talking about the possibility of more money being needed for Greece down the line. It may be months, it may be years, but it's still a very real possibility.
In fact, in focus earlier on, we were talking about the problems in Portugal as well, because there's still concern about other countries as well, isn't there?
That's right, not just Portugal, of course, but, well, Belgium had to announce extra austerity measures yesterday. The government agreed on 1.8 billion euros more cuts yesterday. The Netherlands, meanwhile, has said that they are going to miss their deficit targets. They're going to go above the EU's 3% theoretical, at least, limit. It's quite ironic, given that the Netherlands, their government has been one of the less sympathetic governments when it comes to the Greek plight. Now they're the ones missing their targets. But also Spain, we're seeing pictures of here. They had protests there over the weekend about reforms that are meant to help their economy. And that is an economy of several orders of magnitude larger than the Greek one. And there are continued worries about that. Olivia Salazar-Winspear has the details.
No to the reform and no to spending cuts. Spanish protesters took to the streets against new legislation that they say is an infringement of their civil rights.
Why are we protesting? Because they're cutting our rights like never before. It has taken so many years to get here, and suddenly they take everything away.
As well as a public sector wage freeze, Prime Minister Mariano Rajoy has pushed through spending cuts of 8.9 billion euros. Recent labour reforms have sought to reduce unemployment payments and make it easier to hire and fire workers, creating more jobs in a flexible market. But unions say companies will simply exploit the legislation to lay off more employees.
They want to take advantage of the crisis to revise employment rights and take us away from social equality.
In Brussels, it seems EU ministers are putting out one fire only to look to the next. As they sign off the second instalment of Greece's bailout, attention's now turning to Spain. Monday's meeting should tackle concerns over Madrid's announcement of a 5.8% public deficit this year, instead of 4.4%, which they'd been aiming at. This puts Spain well over the prescribed European target for 2013, which is a maximum of 3%. Rajoy, however, maintained that Spain's economy is on course for recovery and will not necessitate the kind of bailouts seen in Greece, Portugal and Ireland.
So watching that off the back of it all, what about the European markets? How are they opening this morning?
Yeah, well, they're not opening up very optimistically. If we just take a look at the latest figures from the markets, you can see all quite firmly in the red there. That's partly also off news from Asia. If we take a look over at the Asia markets as well, China has announced that its trade deficit was considerably worse than expected for February. This is off the back, of course, of figures last week that China's released, saying that their forecast for 2012 was going to be also lower than expected for growth. So that means that there are worries about Chinese contraction. I should just mention as well that big falls in railway shares on the Hong Kong market after news that a 300-metre length of high-speed track in China collapsed. No reports of casualties, but that won't help the shares there.
OK, well, next, another challenge being faced by the EU is foreign opposition to its plans for a carbon tax on airlines. Last week, China blocked orders for new Airbus planes in response to the levy. And this Monday, European manufacturers are writing to politicians, asking them to reconsider the divisive new tax.
calling the new carbon tax into question less than 3 months after it was introduced. 6 European airlines have written to EU leaders saying the new levies to offset carbon emissions will jeopardise business and cost them billions of euros in lost revenues. They were joined by aircraft manufacturer Airbus in a letter that questioned the legitimacy of the tax. This comes after Beijing blocked orders of Airbus planes by 3 Chinese airlines in protest to the tax. A spokesman for Airbus said that the ETS issue started out as a discussion over environmental legislation, but it is turning into a trade conflict. The letter was addressed to David Cameron, Mariano Rajoy, Angela Merkel and François Fillon, the 4 heads of governments that helped fund Airbus. The Chinese freeze on purchases leaves 10 billion euros hanging in the balance for the company and endangers 2,000 jobs. The carbon tax on carriers should see them add a nominal sum to the price of flights, anything between 4 and 24 euros per return journey. But European countries, as well as China, Russia and the US, have argued that this tax contravenes international law. Nevertheless, Brussels is standing by the legislation ushered in on January 1st.
The emissions from the airlines are clearly going up. And this is a real issue. Every transport sector should take the cost for its emissions.
European carriers have urged authorities to delay the tax, arguing that reducing carbon emissions is a global concern and should not fall solely on the shoulders of the 27 member states.
And finally, business, this is an incredible story. It's the island nation of Kiribati. Now, they've got plans for home insurance on rather a massive scale, Will.
Yeah, the home insurance, in fact, is that they're buying an entire new home for the entire island nation, is the plan, which has got the endorsement of the cabinet. They're buying a $9.6 million plot of land in Fiji, is the plan at least. 6,000 acres, apparently big enough to fit in the entire 103,000 person population, if need be, of course. This is the worst case scenario, but Kiribati, as you can see, is, at its highest point, it's only a few feet above sea level, and if climate change continues and if sea levels rise, then it does face the risk of being swamped, and this, the government says, is a sort of insurance policy to avoid that possibility.
Incredible story, isn't it? Yeah, I hope that never happens, that's all we can say. All right, Will, thank you very much. That's Will with the business news, and Claire, of course, as ever, has the latest news for you after the break. Stay with us.